Hello and welcome to the Wealthy Trades Market Forecast for April 10th, 2015. Let's dive right in. We're going to talk about what happened yesterday. I talked about the S&P 500 yesterday to start the video, and I want to do the same thing today. We're sitting at a fairly key level. I've been saying this for a while. I've been saying that this 211 to about 204 level, the level we've been kind of consolidated in for, it seems like forever, almost like 6 months. This level is key, and as you can see, we continuously put in higher lows, these pivot lows here, higher lows, and we're making an attempt. We haven't put in a higher high yet, except from this peak here and then this peak here. We're making an attempt. We're kind of in a wedge pattern right now. We're making an attempt to break out, and I think that if we do break this area up in here, which is about 211, I've been saying this for a while. If we break 211, then what I think is going to happen is we're going to see another rally that looks similar to this. All right, this is about a 20-point rally. So I think we could probably see a nice, 7, 8, 9% push higher to put us to about 230 all-time highs on all markets. So we need to watch that, but obviously we want to know what's going on today. Short term, we're probably going to be we're in a very short term downtrend in the SPY, simply because you might be wondering, why are we in a downtrend? Well, we have to break the pivot that we're looking to break and close above. Okay, is this 20? It's right here. 208.61 is the high that we. I'm sorry, that is not the high that we have to break above. One of these highs, I think, is about 208, but right around this area right here. It's very, very close. If we close above this, we're going to shift into an uptrend, and I think we're going to kind of break out pretty aggressively. Here's what I want to say, though. Today has the potential, just like yesterday, to have some nice increased volatility. In fact, historically, it's not a great buying day, especially when the S&P 500 is in. It's kind of a weak technical downtrend, don't get me wrong, but when it's technically in a downtrend, it has a tendency not to perform well. And the reason why I know that is because of the levels to win data. Okay, what the levels to win data is telling me is we closed at 208.90 yesterday. Okay, so 208.90. The expected high for today is 209.95. The expected low is 207.89. It's the same distance between the two of the closing price. Here's the deal. It hits the trend side, so the downside is the trend side because we're moving down 53.8% of the time. It hits the counter trend side pretty high too, but less. This shows you the power of the trend. It hits at 40.4. But the issue I have here is when it hits this downside, historically, when it's in a downtrend on a Friday, and it hits this downtrend side, it has a tendency of closing below that, so making money. So it has a tendency of hitting that and continuing to fall. The issue here, actually, when it hits this uptrend side, it has a tendency to hit that and continue to rally. So therefore, this is much like yesterday. These are the type of stats that show me that whichever direction we start to move in aggressively, we're typically going to have a pretty big follow through of that. And I'm looking at the futures right now, and we got the futures up slightly, not up huge, but we got the futures up slightly. And I got to tell you, I think if we get an open around 209 or higher, I think we could see a real nice rally today, even though we're in a downtrend, especially if we get close to this 209, 210 area. Historically, that's a great breakout area. So watch for that. I think we could get a rally. I think for sure in the SPY itself, this is going to probably be a day that we confirm and shift into that uptrend. We've been in a, just so you know, we've been in a weekly uptrend in the SPY and in the market essentially for a year, about 2 years now. I mean, it's been for a long time. But the SPY is obviously in an uptrend. You should have just been buying, buying, buying. This has basically been in an uptrend. Well, let's go, instead of guessing, let's go back and look. So if you look here, we essentially, as a swing trader, you should not have been trying to short this at all, essentially from January 2012. And then we shifted very slightly in September. I don't know if you remember, we had a little mini kind of sell-off, basically through January 2012 through September 2014, and then we kind of shifted a little bit for about a month into a downtrend, and then from November 14th through now, we've been in an uptrend. You should not have even thought about going into either going into cash as a swing trader or long-term investor, or looking to short. For sure, you shouldn't be looking to short as a longer term investor. Yet, again, the Wealthy Trades dashboard will tell us when to short, and that's when the weeklies and the monthlies are starting to point down, and the weekly and monthly dashboard are starting to point down. That's when you want to go to cash or look to take short positions, or maybe look to buy volatility, different things like that. Let's talk about yesterday. But before I talk about yesterday, let's kind of recap the week. Monday was a great week. We did a pairs trade. Long Halliburton, short Google. We were up about 2.8% on that day. That was a great day. Tuesday, long RRC. That was up about 2.8%. So we started the week off really, really good. Wednesday, we did a pairs trade. And we went, I can't remember what we were long. I'd have to look at my statements. And then we shorted eBay, I think, and we were down about 0.5%. Same thing yesterday. We went short Lilly and long OMC. And it was kind of bumping along, kind of break even all day long. At the end, it kind of paired off, and we ended up finishing down about 0.5%. But overall, because we had such a great start to the week, we're up about give or take about 4.5% or so, over 4% so far for the week. So hopefully today we can finish the week off strong. We're going to do a pairs trade again today. And the reason why is because, again, the trend is up. Okay, so the trend is up. So I personally don't mind, because of the technicals I see in the SPY. I personally don't mind taking a little bit of a more bullish bias. What I mean by that is, now you don't have to do this. The one of the rules here at Wealthy Trades is simply, if the trend quality is below 50%, you do a pairs trade. And you do a standard pairs trade, meaning, let's say you have a $10,000 account. Well, you allocate $5,000 to the long position, $5,000 to the short position. That's assuming you don't use any margin or leverage. But on days like today, where we're almost at 50%, and technically we're starting to get some decently strong stuff, signals in the markets, what I might do is, if I had a $10,000 account, for example, what I might do is I might do more of like a $6,000 position long, $4,000 position short. And over time, I'm working on something a video I'm gonna put in the resource center, and a PDF that I'm going to get out. That's a very systematic approach based on technicals, based on the market trend quality, on how do you, if you do a pairs trade, what's the best ratio to use. And a 50-50 ratio isn't always the best, because, just because the quality is below 50 doesn't mean that it's, you should just do a 50-50 short and long. Sometimes, like today, you might want to do like a 60-40. 60% long. But anyway, let's just find the best long position for now, and then we'll find the best short position. Just know that I'm probably going to ratio it a little higher on the long side, okay? So what I'm doing is the XLE, the energy sector, is the best sector. It's kind of been, man, the energy sector has been crazy volatile. I actually said a few weeks ago in one of my videos that this thing has been shifting, and I think this could actually set up for a really nice rally. It has rallied really big. I think this rally could have a lot of legs, actually. I really, really do. The only thing that's going to hold it back, I am very bullish still, and I'm long-term bull on the dollar. That's going to be the one thing that might hold it back. But anyway, let's dive right in. I'm going to get rid of Lilly and OMC because those were our trades yesterday. Now let's use our pair down analysis. Remember, first thing we start at is levels to win profit. We want to eliminate anything that doesn't make money on both sides. That's our first and foremost filtering tool. And by the way, if we just use that as our filtering tool, then that's all we need to do. We could literally, this is the easiest way to do it, eliminate any of them that don't make levels to win profit on both sides, all right? And then, so all of these 8 have a levels to win profit on both sides. So the easiest way, once you get it down to the ones that have levels to win profit, is pick the one with the highest hit rate. So the highest HPP. So Halliburton, you could do it. It could be that simple. I do a little more drill down technique, and I look at the levels on levels. So I want to know. I look at actually the HPP in comparison to levels on levels, but more importantly is I want to know how often. So if XLE is in an uptrend, how often? We know it makes money when it hits this level. All right, it closed at 79.79. When it rallies up on a Friday in an uptrend and it hits its expected high, it typically ends up going even higher because of the profit. We also know that when it sells off and it hits the expected low, it typically bounces off that level and then closes higher because it makes a profit, because it's in an uptrend, right? So that's good. And we also know it has a pretty high hit rate. But what I want to know is how often does it have a tendency of closing above its trend side? So it's got an expected high of 80.44 today. And the higher probability, so right now the XLE has a 28.8% probability of closing above that. That's historically. Well, obviously, the higher that number is, the better, because we're looking to buy it. And then the levels on the counter trend side, this tells me the probability of it closing below this level. So the lower this number, the better. So we want a high percentage here and a low percentage here. That's what we want. This also, one thing that I really want to point out is this just shows you the power of the trend. Look at this, uptrend. For those that say, oh, trend doesn't matter, just take overbought, oversold signals, or trade, support and resistance, or whatever it might be. I'm telling you, ignore that kind of stuff. That stuff is good. Support and resistance, oscillators, different things like that are good things to incorporate as long as you're trading in the direction of the prevailing trend. You have to do that, and this is the reason why. Look at this. Why would you ever think about shorting the XLE today? You're putting the probabilities against you if you look to short, because it hits the trend side 44.2% of the time. It hits the counter trend side 34.6% of the time, and they're the same exact distance from the closing price. Okay, so math says, probability says, if trend doesn't matter, then these numbers should be the same. Look at the close percentage. It closes 28.8 and it closes 9.6. That tells you, obviously, why would you want to short the XLE today? So anyway, I got to talk. We're all about trend and probability at Wealthy Trade. So and that's really what the whole dashboard and everything we do is based around trend and probability. And it's all ranked around those two aspects. That's everything we do, because that's how the market prices in. That's how the options market, the market makers price and structure their trades. It's such a powerful concept. So, okay, anyway, XLE looks good. But I could tell you, well, these two are pretty close, okay? So CAM might be a little better. CAM hits the upside 51.9% of the time in comparison to 44.2. They both close above their trend side about the same and the counter trend side. So it's a coin flip. Because CAM hits the upside a little more often, I'd probably say CAM's a little better. CVX is better than CAM. So CVX closes 30.8 and 13.5. Remember, we went high here and low here. Well, because it closes at 30.8, I'm going to say CVX is slightly better. Look at HAL, 46.2 and 3.8. That one's obviously better than CVX. Obviously better than HP. Okay, Nova is really good. All right, so it's going to come down to Halliburton, which is 46.2 and 3.8, and Nova, which is 46.2 and 7.7. And so Hal has a higher hit rate and better stats. Halliburton is our long position for today. So now let's go in here and let's look for a short position. And the sector we're going to look to do a short position in it is the XLV. So I'm going to move that over into my portfolio. And by the way, when I make that video in the PDF on the process, on the how to structure the ratio, it's going to be based on probably the quality percentage, but kind of jumping ahead of myself, that'll be published within the next few weeks. Okay, so now I'm going to go through. Again, I'm looking at look at loses money on both sides. Let's get rid of that one. Just flipping through here. All right, XLV itself loses money, so get rid of that one. Okay, so now let's. What we want to see is high number, low number. So BIIB is better than Amgen. It's better than UHS. Let's look at Abbott. So BCR is better than Abbott. $38.21. See, the thing I don't like about SYK is the 21%, there, where we only get 11% there. So I'm going to say BCR is better than SYK. 34 and 7. THC is better than BCR because I like the fact that it's only 7. It's higher here and it's lower there. So I'm going to say THC. So let's compare these two: 32 and 21, 34 and 7. THC is the way to go. So here's the play. Here's the play today. I'm going to go long Halliburton at the open. If it hits the upside, I'm going to add to the position. If it hits the downside, I'm going to add to the position. I'm going to hold it all day long, close at the end of the day. THC, I'm going to short at the open. If it hits the trend side, 49.97, I'm going to add to the short. If it hits here, I'm going to add to the short, and I'm going to close it at the end of the day. I personally am going to put a little more weight on the long side because technically I like the long side. But again, the standard rules is just pairs trade 50-50. So long Halliburton at the open, short THC at the open, close both at the end of the day. Hopefully we can make it a great day. I will do an update this weekend on how the weekly trade and the monthly trades are going. For this week, we are long KR, and so far it is up slightly. We'll see. Today should be a decent day for it, but it's up slightly. And for the month, we're along the healthcare sector. The best stock in the healthcare sector is CAH. So that is that. Make sure continue to watch. I'm going to do some options videos today and post those in our resource center in the premium tab. I want you guys to go here. There's some great. I would take the time, if I were you, to watch every single one of these videos. 4 Steps to a Successful Trade is a phenomenal series. It helps you understand our product and kind of how, my mindset and how I trade. Advanced Techniques is awesome. Watch all our videos here. These, some of them are really short. Dashboard Dive is probably our best video or my favorite video to kind of give you an overview. And then obviously our podcast. So if your trial is about ready to expire, you need to sign up right away. Again, remember the first 1,000 members get a deeply discounted membership. Do not let your membership expire. I'm telling you, this is information you need to understand. It's all about trend and probability. And that's all we do at Wealthy Trades. We help you put the odds in your favor and find the best places with the highest probability to allocate money. Thank you for your time, guys. Have a great weekend, and we will talk to you on Monday.